Right, what's up, everybody? This is the Float Locker. I am going to talk about in this video. It might be a little bit long, and what I'm going to go over is a liquidity pool that I've had on over the past 708 days. So I don't think anyone really sees, especially in this space in concentrated liquidity. We don't often see liquidity pools running that long, right? And I want to show how time in the market beats trying to time the market, for investors, right? And it really comes down to just pacing yourself, understanding that investing takes time, trying to degen and trying to make it all in one day, right, is very risky. But you can take a risky asset, like in this case, Shiba Inu, and you can generate some income over a long period of time, right? So here, I'm going to get started on this. And what you see here is my Discord. And here's an old post from February 2022. The backstory on Shiba is I bought quite a bit of Shiba last cycle. I bought it in February, and in October, I took some of that Shiba and I farmed liquidity pools with it. And that was my very first time messing with concentrated liquidity. There were during that time, that was during its last euphoric blow off top run in 2021, and I was farming liquidity pools, and I was seeing returns so insane that the yields on some days were 3% per day, right? And I was ROIing on my liquidity pools like within a month. So uh, Shiba started out as just purchasing the asset, but over time, it's turned into a huge gain, took profits, kept the moon bag. The moon bag turned into something significant, took profits, had another moon bag. And this cycle repeated multiple times over with this asset, with Shiba. So I'm a little partial to Shiba, right? It has a place in my heart, so to speak. That's the thing, like with investing, right? Sometimes we're happy with like a 2x in crypto, like a 2x gain, 3x gain, 10x gain. But the rule of thumb is you got to leave that moon bag in there. Always leave a moon bag, you know, and leave enough to where you're not upset that you didn't leave more, but don't leave too much to where you'll be upset if it goes to zero, right? So always take profits, but always leave some on the table, right? Let some ride, right? That's the way to play this game. So here's an example of running a liquidity pool with Shiba Inu and Ethereum over the past 708 days, right? I had other liquidity pools with it that I was rebalancing, right? Prior to this with Shiba. I'm not going to go into that. I'm just going to show the results of this, my latest liquidity pool that's currently still active to this day. I have not closed it out. So you can see here, I parked some liquidity in here, and I believe I had like, yeah, here you go, 23K worth. This was back in 2022. This this was the moon bag of a moon bag, right? So I parked enough to where like if it goes to zero, I mean, yes, it would staying in would suck, but the potential, right? And during this time, like in this case here, I was mapping out a 3K per month yield, right? Like it was producing so much yield on 23K, 3K per month, you know, that's like more than 100%, right? And over time, I'm letting this go and produce and generate the yields, and this is all documented, right? And then we finally get to the current update here, right? And this is the real live liquidity pool on APY Vision. And this is the performance of the liquidity pool, right? Over time, I've been taking profits, right? I may have put 23K in, but what's great about APY Vision, which I highly suggest using if you're not using it, especially if you farm concentrated liquidity, but the average capital provided here was $3,000. Even though you saw me put in 23K, you know, I'm constantly taking profits, right? Eventually, right now I have about 4K sitting in yield unclaimed on this liquidity pool. I really don't mess with it and I really don't look at it, right? I look at it maybe once every couple months and just see how it's doing, right? And I'm just like, leave it be, right? Look at this range. It's not very wide, but it's wide enough and I'm pretty familiar with this pair to understand like where it trades, right? Yes, sometimes it goes out of range. Sometimes for months on end, it'll be out of range, right? But I don't care. I just leave it be. I'm not worried about rebalancing and like always, you know, trying to actively manage it. I'm just leaving it, right? Because, in this case, this is a moon bag of a moon bag, right? So I don't care what it does, and I'm just gonna come and farm the profits when I'm ready to, right? When I feel like it's significant enough, right? So take that into account. I've been pulling profits out, even from the principal. Sometimes I would collect some of the profits out of there and dump it into other assets and invest, right? So my average investment is currently 3,000, right? I brought my cost basis down to 33.23 from like, what was it, 23 grand? Here's the performance. It's been 708 days. And this is a good example to show like, don't be so worried about the now, but really focus on what the goal is, right? With investing, right? Especially with concentrated liquidity, it's not a get rich quick. It's not, you're gonna make 100x tomorrow, right? That isn't the strategy for concentrated liquidity. It's just another tool in your tool belt to run with your portfolio. So here we go. Let's kind of break it down here. Here you can see on this chart here, you can see the blue line up here, that's the total estimated value. That's with yield, appreciation, everything, right? The green line, that is if I would have just held Shiba. If I held Shiba, I would just be at 10 grand, 10,852. It would be a gain. It would be like a 3x gain, sorry, from 3,300. And then if I hodled the red line or purple line is if I hodled 100% Ethereum, I would be at 5,800. Almost a double, right? On that, right? And then if I just hodled the asset, the gray line, if I hodled both assets separately, not in a liquidity pool, just in my wallet, it would be worth $10,852. So clearly shows that more than 2x the 22,000, nearly 23 grand that is worth or that I've earned over that time, more than doubled what I would have gotten even if I just held Shiba or just held ETH, right? It just, the time factor is the alpha here because you need volume to generate yields. You need investors, you need traders to trade your assets, but you have that happening, the volume, the trades, the fees generation over long periods of time. That's the alpha, right? There's just no other way around it when it comes to concentrated liquidity. Look at my impermanent loss, 360 bucks. Anyone out there saying that concentrated liquidity doesn't work or impermanent loss this, losing that, negative this, don't listen to them. There's a reason why this tool is still in the market and it's still being used today and it's being adopted and people are starting to realize that concentrated liquidity can work if you understand it, if you understand the process, if you understand how to structure your liquidity pools. Very important to understand that. Once you get it and simplify it and understand it, sky's the limit, right? Liquidity pool gains, that's with impermanent loss. Net market gains, 19 grand, over 19 grand, almost 20 grand in 2 years on a 3K investment. Now we go to the position income. You can see this beautiful chart. There's just yields collected over time. And you can see the periods of time where I didn't earn anything. Like here, you have December until March. I didn't earn anything, but I just didn't care. I didn't care enough to be actively managing, right? You could, right? You could, and you could generate even more income. But I wanted this to be passive. I was done with the trade and I'm just letting it work. And I just come every once in a while. It's kind of like having that crop out there just growing. It's self-sufficient. I just come by once in a while and I pick some fruit, right? And enjoy the fruits of the labor, right? The lack of labor, the passive labor. So yeah, so you have that, and then you have a breakdown of the yield previously collected, $8,200 in fees. Right now, pending fees. I have $4,200 worth of fees waiting to be harvested, right? It's kind of like a farmer coming to farmer yield farming, right? You grow your crop, let it grow, harvest the fruit or whatever, the wheat. Here we got a breakdown here, the value. That's why it's so good to have APY vision, man. It really shows you a complete breakdown. And then we got here the fees annualized. Now you can see this going down over time. That's mainly because in the beginning, there wasn't a lot of liquidity in this in Shiba, right? In Shiba ETH. It wasn't that large. So the APYs were high with high volume. That's a perfect combination to generate high yields because with higher TVL, with higher liquidity, there's just more mouths to feed, you know, of the yield. People have to split up that yield now. More people as time goes on, right? People invest more liquidity into this pool, right? APRs drop. Either one or two things need to happen, right? Volume needs to increase or TBL needs to decrease to prop up these yields more, right? And now recently, this year, they're kind of popping up again, and that's mainly due to volume, right? More interest in the market, more people active, more people trading, right? Generating more business for you as a liquidity provider. They're using your liquidity. See down here, you got a little annualized breakdown, return on investment, almost 600%, right? What would happen if I hodled here? What if I hodled all Shiba? What would be my profit? Well, I wouldn't have 12 grand, then I would have $12,100 less than I do now if I just hodl Shiba. That's why I think of it as like multi-dimensional, right? If you're just hodling assets and you're just hoping for price to go up, and you're sitting there like, ah, man, I just wish, I wish, I wish. I mean, that could be investing too. And then I do it. I do it with some assets as well. I don't provide liquidity on them, but you have this opportunity here to generate income on that asset. And especially if you plan on holding something for a long period of time, why not? Why not generate income? And then if you hodled 100% Ethereum, not even close, man. Like your performance, talk about impermanent gain. Impermanent loss, what? Like this not even close. So, those people that think that concentrated liquidity don't work, here's the proof, right? And then we go over the transactions. Obviously, that's the gas fees, $59. That's nobody wants to see that. That's only just to stake the liquidity and probably withdraw I don't know, some of the proceeds, right? Over time. But this here is really important to see, right? I have a visual here. I don't think anybody has these type of liquidity pools that have lasted this long because this space is very new, right? But here you go. I have proof. I've been in this space for quite some time. I've been trading the markets for over a decade, for over 15 years now. I trade stocks, I trade futures, I sell option premium, right? And I'm in crypto. But right now I'm focusing on concentrated liquidity because the opportunity is there. I go where the opportunity is and capitalize on that. It's very important to look for inefficiencies in the market and capitalize on that, right? That's pretty much it, It's just really honing and pounding home that it is really time in the market, not trying to time the market. Okay? So I hope that helps. If you have any questions, post them in the comments below, and I will see you guys on the next one. Peace.